So good morning and good evening to all the folks zooming in to join this edition of Arka Talks. My name is Alok Nandan. I'm one of the founding partners at Arka, and I'm joined by our guest today, Jayant Kadambi. Jayant is one of the few people in the US-India ecosystem that has taken a company public from zero to IPO. But before we join and dive into Jayant's journey, a quick thumbnail about myself and about Arka for the folks in the audience who don't know us. Early in my career, I used to be in Microsoft and I had a distributed R&D team. After that, I was fortunate enough to join YuMe, where Jayant was the CEO, and saw firsthand how startups, not just big companies, are building cross-border teams. Now, distributed teams are the norm, not just at the scaling phase, but even from day one. In addition, these days, it's not just R&D functions, but also in some cases, go-to-market functions that are distributed from day one. Arka Venture Labs came about to support this new reality of startups. It is an early stage cross-border accelerator enabling Indian B2B tech startups geared to go global with capital, mentoring, and deep access to the Silicon Valley and Indian startup ecosystems. Arka is one of the first accelerators with dedicated focus on the US-India cross-border enterprise ecosystem, backed by 3 early-stage funds, BGV, Bloom, and Emergent as anchor investors. On that note, I want to turn it over to Jayant. Jayant, since everyone may not know your journey, it would be helpful to start by telling the audience about your early career, how you ended up in the startup world. Over to you, Jayant.
Good morning or good evening, everyone. Thanks for inviting me, Alok. It's a pleasure to be here. Happy to talk a little bit. Hopefully, provide some interesting stories. As far as getting started in the in this business, I'm pretty sure there's something in the air in California. I think within 6 months of moving here, I had maybe it was maybe 8 months of moving here. I had quit my job and started a company. So I think there's some virus that's running around. Early on, I'm an engineer by training, actually in semiconductors, electrical engineering, hardware design. Spent 7 years at doing that on the East Coast. And after a terribly bad winter in New Jersey, we moved to California, and that's how I ended up here. Getting started, it basically took. The ecosystem around here, you just talk to everyone, wherever you go, whatever parties you go to, whoever people you talk to, everyone's either raising money or trying to raise money or starting a new idea. So it's a pretty conducive environment to do that. Especially people of my generation, I think, at least definitely my father's generation, you start a job and you never leave, right? So I think in the early 90s, it was a little bit odd as well to suddenly disappear. But yeah, so we did that, and it took 3 or 4 shots. The first couple weren't able to raise money. Then we raised a little money and couldn't raise more money. So you fail a couple of times, and it's a little bit difficult. And then you figure a few things out and you end up in the right place at the right time, and so it goes.
Yep. No, awesome. Thanks for that, wonderful intro. Let's dive into the YuMe journey. For the audience, most of the audience here is founders, or founding team members or entrepreneurs in the US India ecosystem, right? So tell us a little bit about sort of the YuMe journey in terms of what was it like, and any key sort of takeaways for founders or entrepreneurs which are just starting out.
Yeah, I mean, so we started out in a business. For those of you who don't know, YuMe is a company that that's in the digital advertising software and media business. So essentially, it's a software company that sold into enterprises, and a media company that had salespeople running around looking for ads to run on videos. So all those annoying videos or ads that you see in front of videos, which is pretty ubiquitous now, was not 10, 15 years ago. But when we started the company, we actually started in what is now the Roku business. So we started in a completely different business where we were taking content, distributing it digitally, shipping a set-top box, and running ads in front of the set-top box, because I had figured out that I didn't understand why, when you ran a CD, you saw trailers from movies 2 years ago. So we said, let's update the trailer and put a recent trailer in front of the movie that you ran, digitize it, and ship it over a set-top box. And so we started in that business. So, I mean, the first thing I'll say is the idea that, you first have may not be perfect. At least you should at least consider the possibility that the things should evolve. And so we changed things a couple of times, went from the set-top box idea, which costs a lot of money to distribute. You need to raise a lot of capital, to, okay, let's run the same idea on websites because everyone has websites, to let's give up on content to start just running the advertising business. So I think being able to adapt to your idea is a little bit sort of par for the course, I would say. In terms of the business, we started in 2005, and you have to understand, in 2005 there was no YouTube, there was no iPhone, and so it was hard to imagine. Now I think looking back, people won't realize it, but when you start saying things like video or advertising and digital and everything else, venture people and people who analyze markets are sometimes don't see the future as well as you would, or you would propose. So there's always a comparison, especially in India, I found, where has this worked somewhere else? Where's the precedence for the idea that you're doing? So if you come up with something that's not around, you'll struggle a little bit, because people they'll want to see the proof of an idea working. So we struggled for some time, from 2004, 2005, all the way through 2008, 2007, 2006, 2008. We struggled for some time, and then I don't know how many people in the audience will remember, but 2008, there was a financial crisis worldwide, mostly in the United States. Yep. And just like the pandemic here, that crisis caused a shift to digital advertising. People ran out of money. Advertisers were looking to save money, and they all wanted to try the new thing. And the new thing was video, because YouTube had shown up, the iPhones had shown up, and everyone wanted to run digital ads. So in the sense, we ended up in the right place at the right time, and people started treating digital video advertising as a real business. And so we just sort of hung around long enough. So I think if you concentrate on your priorities, and just continue to focus on the business and be persistent, I think good things tend to happen. From there, 2008 to about 2013, it was, building the business, execution, expansion, all the sort of fun things that sort of make it worthwhile. And then in 2013, summer of 2013, we went public. And then it was what, at that point, it was 12 or 13 years, something like that. And then after a couple of years of being a public company, I decided to to go into the sort of angel investing, mentorship, coaching, etc. business. So here I am.
Thank you, Jen. Fascinating journey. I still remember when I joined YuMe, one of the co-founders, he showed me the set-top box that was still in the office.
We still have that.
Yeah, and that was, at that time, building hardware was sort of, was becoming out of fashion, right? So it's kind of interesting, the pivots and the grit and the perseverance it took to get to where YuMe was, right? So I was always very inspired and, by the story. So thank you for that. By the way, in the audience, if you have questions for Jayant, you can post it in the chat window, and I will try to take as many as I can as we go along. So thanks, Jayant, for one of the takeaways, I think from your story is survive long enough and good things will happen, right? And is that fair?
Yeah, I mean, I'm always a believer. People always ask me as to what it takes and how to succeed, and what the most important criteria are. And I'm sure everyone gets asked this question. My answer has always been nothing can take the place of persistence. There are a lot of very highly talented people. There are a lot of very smart people. There are a lot of, hardworking people, a lot of people with great ideas. But, the number of people who have the grit and determination and persistence to just will it, I think, reduces quite tremendously. So if you can just be very persistent, obviously you have to execute well and do other things well. I think you'll be in pretty good shape.
Yep. Awesome. So just, along the same lines, running a startup is hard, and running a cross-border startup is at least doubly hard, especially with, 12-hour time zone difference. So how did you manage your time, especially with teams which are on the other side of the planet? Any tips for entrepreneurs?
Yeah, I mean, it's not easy. The time zones, especially between India and the US, is from the West Coast is not that wonderful. It's 12 and a half hours, as everyone knows. In 2 or 3 days, it's going to even become worse. It's going to become 13 and a half hours, which for the West Coast people and India people is a little bit odd. So there's not much you can do other than, burn both sides of the candle. For at least on the important things. The first thing we did is we were a little bit lucky in the sense that one of the people that we had started a previous company with decided to move back to India. So we had someone that we knew, we understood, and had worked with a long time. So things that, some hour-long conversations became 5 minutes. So the efficiency increased a lot because you understand the person. So that's the first thing I would say is try and find someone that you can trust. And from India coming into the US, that's not easy. So usually what ends up happening is, and the venture people will tell you this, so one of the founders should move there.
Yep.
And that's the equivalent of, I got to find someone I can trust, which is myself. That mechanism works, but once you're there in the States or once you're in India for a while, you can, you've been there for 6 months or a year, you can usually find someone and establish that trust to reduce your commitment. The other thing I'll say, and I ran into this when I first met one of the VCs that we were funding. I think everyone's probably heard of his name, a guy by the name here, Vinod Khosla. He runs Khosla Ventures here. I had walked in and I had gone for a standard funding pitch, and his first question is, "Can I see your diary, your calendar?" And in those days, I was still running around with a book, as opposed to Google Calendar or a calendar system or Outlook calendar or whatever. And I opened the calendar and I was very proud of myself. It was completely full. The 2 weeks before, things crossed out. It was a big mess. And the guy looked at me and he says, "This is a complete waste of time. I'm not sure." I hadn't even pitched yet. "I'm not sure I can fund this." And he hadn't heard the idea because he said, the rationale being, you're not spending your time thinking about what matters. You're just doing administrative stuff all day. and you're very proud of yourself that you're very busy. But I want to see this next time you come to be half empty. So in the sense of managing your time, I think thinking about what is a proper priority to be spending your time on and what can be pushed off or given to someone else, I think is very important. The tendency is for entrepreneurs and especially early founders who are trying to raise money or have just raised money is to try and be involved in everything and do everything. And generally speaking, it just means nothing gets done perfectly. So, and I feel it's better to get something done that you work on properly, and just decide what's important and what's not. So prioritization is the other thing I would say.
Awesome. No, that's a super lesson, right? Keep your calendar half empty so that you have thinking time, and that's also a signal of how well you can delegate. Awesome. So along those lines, as the company was growing, right? Growth is very different at various stages of the company, right? And you took the company from zero to IPO, right? So and in the process built a large team and a phenomenal team, right? And your reports, accomplished people, right? What are the common mistakes or kind of things you shouldn't do as a CEO as it pertains to management or hiring your executive staff? Any thoughts there? Yeah.
Yeah, I mean, this is a fairly common question that everyone gets asked. My answer to this is as far as the business is concerned, and I'm also a believer in investing in people as opposed to primarily investing in the team and the people. The market and the idea and the business logic and the acumen, all of that can be learned and figured out, but it's the people that matter. So if you sort of believe in that philosophy, you should spend a lot of time hiring and getting the right team and getting the right people and making sure the fit is right, because that's what's going to drive the company. So a larger proportion of your time and so the other thing I'll do is you should fire quickly. And it's a very difficult thing to do. And most of us tend to say, okay, let's give it a chance. This didn't work out. Let's try this, let's try that. And, I've learned, at least personally, the right answer is to cut it off and go try the next person rather than try and get it to work, because it's just, at least in my experience, if it doesn't work, it doesn't work. Maybe no fault of your own or no fault of the person you've hired. The situations aren't always perfect. So I would the one thing I would say is spend a lot of time on your team, and if it doesn't work out, cut the cord pretty quickly.
Mm-hmm. Mm-hmm. Yep. No, this is great. Kind of related to that, right? And it could be for growing your team is what advice you would give to your younger self, if you were sort of starting out again, in your mid 30s or whatever, right? And you were sort of, and with the twists and turns that your journey has been, right? Is there something you would say that you would do differently, or you wouldn't go there? Any thoughts on that?
Yeah, I mean, following up on my last comment, if you hire the right people or you think you've hired the right people, you should give them rope sooner rather than later, right? You'll be surprised as to what they'll do. You're either very lucky or you've done a decent job hiring when all the guys you hired have become big shots, right? The people like you, the people who used to work for us. If you remember, the CFO of Slack is a YuMe employee. The CEO of Triller, your colleague, I think, is so. And I think the thing I learned is if they can do that, I could have given them more rope earlier. So, so that's the message I would have, which is, if you're going to have people join your team, especially early stage, you should give them rope faster rather than slower. And if you're unsure of whether you should or not, you probably shouldn't be hiring them.
Right. Yep. No, that's great. By the way, talking about Triller, they are in the news, right? Every time TikTok is mentioned, Triller is there. So, he's in the news daily now. Yep.
Yeah, Michael's got a good PR machine going. So,
Yep.
But awesome. Even then he's, if you take a look, Triller's another good example. They started in the video edit tools management business.
Yep.
They were not in the consumer
short form
video business. They started out in a completely different business. So that journey is an interesting one as well.
Yep. Awesome. Just switching gears, since you mentioned the esteemed Vinod Khosla, talking about the board, right? Many founders have, different styles of handling the board. They do everything from, I never want to hear from you, so I will give you the least amount of information possible, to over communicating every up and down, right? So where in the spectrum do you stand in terms of communication with the board members, and any sort of advice to founders who are just forming their board in terms of board formulation and so on? Yeah.
Well, just like hiring, I think board management at the right time in a business, of course, as you get a little larger, it's probably starting with a Series A or a Series B company. Board management is something many founders spend, I think, too little time on and don't give it the value that they need to. What you get out of the board is only as good as what you put in, to use the cliche. And what you put in is, you should give them, in my opinion, enough information where they can give you wisdom, right? It is your job to decide whether you should take the wisdom or ignore it. But in the end, management is running the company, and management should be accountable for the company, and the board should be using their experience and their breadth to give you ideas and to give you direction, but the accountability should be yours. So to those people who don't give the board any information because they're scared of the board getting into the micromanaging mode, I think they're making a mistake. I think they should have the confidence to say, look, I'll take advice. I'll take advice to go left, to go straight, to go right, to go back, and I'll decide what's right based on all the advice. And I want all the advice. And I think to those who ask the board for every decision, I'm exaggerating, or to give them too much information and spend too much time there and then try and make them all happy, is also a mistake. In the end, it's your responsibility. It's not the board's for execution, and it's the board's to give you guidance, and in the end decide whether you're doing a good job or a bad job. Kind of give you a letter grade, not run the company. Yep.
So on a related note, now you're on the other side of the table and you're a board member as well, right? In terms of your sort of experience, who was the, best board member you've ever worked with, and sort of what made them special, right? Any thoughts on that?
Yeah. I don't know. Best is a tough thing. Since you brought up Vinod, probably everyone knows his name. I'll give you my perspective on Vinod, but the Vinod was always, if I told him we would do 10 million of revenue, he'd ask why it wasn't 100. If I told him we would do 100, he asked why isn't it a billion, or how can I help you get it to a billion, to put it in proper terms. So his constant urging was, what can you do to make this bigger, better, faster, right? So that was the perspective that he brought. And I think that's always a good perspective. I've noticed this, especially among sort of Indian, the venture community and in the Indian founder community and the entrepreneur community, it's a good perspective because there's always a money constraint in India. The VCs tend to give smaller pockets of money. The entrepreneurs tends to be squeezed a little bit more. So there's a over rotation, in my opinion, towards preserving cash and showing a profit, and less of a thought to how do I build a proper big large business. Right?
Yep.
So I think that's a helpful perspective to have. As far as the best board members, I think those are the ones that actually spend the time to understand your business. Board membership is not coming to, in my opinion, coming to the meeting once in a while, and giving some wisdom and then walking out, or for an entrepreneur showing the board and saying, I have Vinod Khosla on the board, or I have Shailendra from Sequoia on the board, or I have some big name, or Alok Nandan on the board, and therefore they know the founder of Flipkart, or they know Narendra Modi, and they can give me introductions. Is not, you can get that independently of that. It's always useful to have, but what I'd rather have from a board member, and the best board members are ones that actually spend the time to understand the business so they can use their experience to give me proper wisdom. Right?
Yep.
Or what to do in this situation, what to do in that situation, because they've seen a lot of the same problems that have happened. But what that takes is some time and energy on the board member's part to think about the problem.
Yep. And any thoughts on a final question on board membership? Any thoughts on independent board members? When should people consider having it, if at all? Or yeah.
Yeah, I'm pretty biased now because I'm an independent board member, and so I advise you get an independent earlier rather than later, and find an independent that you trust, and support, because there are a lot of things going on where understanding the board dynamics, getting the independent to tell you to spend the right times, right priorities, I think is very important. Looking at term sheets, there's a lot of things, just governance things. Starting from Series A, you should be looking for an independent. The other thing I'll say is it's easier to put an independent on the board at Series A or before Series A than afterwards. Because you have fewer people you have to please in terms of getting the independent, and so you can find a person you think is right than doing it later. And most people only do it when they have to, when the company's at a Series B or Series C, or they're trying to go public, or they're looking for specific things that they need to get done.
Yep.
I'd start a little earlier.
Got it. Great. Now this is super. Just switching gears, Jayant, I know you're now also an active angel investor in the US-India B2B ecosystem, as well as B2C, actually. And what are the, having been sort of a founder, taking a company all the way, what are the qualities you look for in a founder when you, decide to angel invest? What are the leading indicators, if you will, that you look for in a founder?
As I said, I tend to follow the it's the team theory. So the personality type that I look for in founders is it's about whether I think. Primarily about whether I think they'll be persistent and they have grit and determination. And it's hard to judge that, but if you spend enough time with them, you'll be able to see, or at least you hope you'll be able to see, because as I've said, my theory is the journey, as you call it, is going to have its ups, its downs, and it's going to go left, it's going to go right. And so you need a lot of persistence. The other thing I look for is an open mind. To the point where we talked about the board management, is you should be not so dogmatic as you're completely convinced that you're only going to do this thing. I mean, those kind of businesses work. Steve Jobs is a primary example, right? It'll be done this way or it won't get done. But I tend to like founders, or mesh better with founders who are open to exploring multiple choices or multiple avenues and are not fixated on a particular set of things, because things are changing very fast. And if you're open to ideas, you usually have a better probability of success. So I think those are the two big things I look for.
And any as Charles Munger says, invert, always invert. Anything that you look for that is a red flag, that is something that's, you think is clearly like you wouldn't invest in this founder, this type of founder, or this quality,
One of the things I'll say is I find nowadays there's a lot of people who are, to use an American phrase, trying to keep up with the Joneses. There's a large number of people who, in the middle of the conversation, are saying, "Well, that guy got 3 million free money, and they made this much." So there's a tendency to put yourself in someone else's shoes and say, "Hey, how come I can't do that?" Or
Yep.
why is my situation not like that situation? And when you're having a conversation about starting a company, I think you should be focused on your own business rather than worried about what other people are doing. So I tend to rotate towards away from those conversations rather than towards the conversation about, why can't I raise $1 million? Why do I have to raise only 400? She got $1 million and she's got less than I do, right? So those kind of conversations will make me a little bit nervous, because every situation is unique, and you can't run an aggregate data problem in your particular situation. And I know it's very difficult, especially if you're sitting here or you're sitting in certain areas in HSR layout in Bangalore. It's pretty hard to avoid those conversations, but I think getting the entrepreneur focused on the right problem is something I look for. Or to use your reference, I'll avoid if I see them not focused.
Got it. Yeah, I mean, I think angel investing is any sort of, because you've done investments or you're advising companies on both sides of the border, both in US as well as in India. Any sort of prototypical things that you look out for, or anything that kind of you see that this is sort of dramatically different in those two ecosystems still? Any thoughts on that?
I mean, the Indian ecosystem and the American ecosystem, from an investment standpoint, I think the risk appetite in India is far lower still than it is in the US by and large. So looking at what it takes to what metrics people are looking for, and this is sort of a overall view, so it may not be accurate in a particular case, but I'm sort of generalizing where I shouldn't. In general, I think the Indian investment community tends to be more metrics and financially driven than the US community at a similar stage. As a result, the entrepreneurs tend to say things like, once I get to $100,000 ARR, then I'll look for my Series A, right? In India, more than they do in the United States. So from a founder entrepreneur perspective, I think I've noticed, perhaps because of the way the venture community looks at it, founders in India tend to do less blue sky things or less things that require a lot of capital, there are very few product companies in India. Engineering, hardware, software, because it costs capital to do and the risk is higher and it's harder to raise money. So there tends to be a lot of service software. What can I do in my corner by myself and prove it and get my customers? So, because I've been to quite a few pitches, and if not the first question, the second question from the venture person in India tends to be, has this worked in the US? Right? So there's also a little bit of, okay, if I pick a new idea, how am I going to show that this is a good thing? Or so there tends to be certain differences like that. I tend not to hear that in the United States as to has this worked somewhere else, or who else has done this, or they tend to judge the idea on what they consider to be the merits a little bit more. And all of that is changing. Even you have to remember, in India, the venture community is only 15 years old. Really.
Yep.
So.
Yep. Got it. No, this is great. Just a reminder to the audience: if you have questions, send it on the Q&A or in the chat interface, and we'll take it up. We have a few more questions, and then we'll take up audience questions. So, a lot. This is more on sort of Silicon Valley's future, and also sort of this whole distributed team era, right? A lot of ink lately has been spilled on sort of the demise of Silicon Valley and the rise of remote teams or distributed teams, right? And we are Arka. One of the thesis was that there will be distributed teams from day one. But any thoughts on sort of post-COVID, whenever that is, that life will go back to business as usual in our neck of the woods, or do you think things have changed forever in Silicon Valley as we know it?
I think something like this takes a long time to get over. So, the tail of this, because it's affected the psyches of so many people, the tail of this will be quite long, right? But there is a certain, in my opinion, a certain fatigue to, humans are social creatures. And in the end, I think the social requirements sort of infuse themselves into business and the personal life, and the lack of social interactions in the business life will take its toll on the human, independently of the business. So there'll be a natural gravitation to get together, if not at work to start with because of regulations, after work for a get together. You may social distance first, and then you'll have a beer, and then you'll go into a restaurant or whatever. So I think in general, the social interactions will come back. I won't hazard a guess as to what the tail will be. I think it depends on the industry as well. It's pretty easy in certain industries to talk less and work more. In certain industries, you have to talk more. I think in certain industries like UX design and design, where people are ideating and have groupthink, it's a lot harder in Zoom to do it. Whereas, if I'm writing software in a corner and I have to do a code review, it's a little bit easier, especially when the product spec is coming properly. What I have noticed about the pandemic in two cases is the number of people who are in quite a few across the portfolio that I'm seeing. The number of people who are quitting and resigning is higher, because what we found is a lot of people just can't cope with being separate for too long. They were hired assuming it was a social environment, and being isolated is not conducive to the way they work. So they tend to get either depressed or irritated or unhappy, or they don't understand the mission anymore, and they feel isolated and they resign. And we've also seen quite a lot of people who are very inefficient at home, as opposed to people who think it's great to be at home by themselves. So the isolation has made them inefficient. So the workforce was hired for a social at-work environment, and I think there's a shift towards a workforce that is optimized for at-home environment, and that will take some time to change. But I think in general, people will be more social and want to get back to work.
Yep. No, that's an interesting perspective. I think given that you've managed such large teams, I think that's a that's a super interesting perspective, because we are early stage people, right? So when we see companies, there's like 2 guys in a garage and they're scaling to 10 people or 20 people, right? So some of the organizational challenges with this distributed environment we may not be seeing, but you're absolutely right. I mean, there are people who join startups because of the energy and the social sort of experience of being in a startup, right? In terms of opportunity, do you see, given that YuMe was sort of had to weather the global financial crisis in 2008, do you see 2020 as sort of a similar both challenge as well as opportunity for entrepreneurs, in the sense of like an exogenous shock to the system, and which will open up new opportunities for startups? Any thoughts on sort of similarities between now and 2008, 2009 timeframe? Yeah.
Well, I think one big difference is the money dried up in 2008 from a venture standpoint, and the money hasn't dried up here. Right.
Got it.
So I think there's a fundamental difference, at least in terms of startup ecosystem, that I'm seeing. Is there, if you ran out of money, there was no VC to come in and say, here's some more, let me get some runway for 18 months. Let's try and conserve cash and stay. It just dried up and you went belly up, right?
Yep.
So here, I think there have been definite people who businesses that have gotten huge tailwinds, and businesses that have suffered, but from a good solid businesses, whether they've suffered or not, at least from what I can tell, have been supported with capital to extend the runway. So that's a pretty big difference between now and what I saw in 2008. In terms of how this changed the ecosystem, I think it feels as if the pandemic has accelerated the change towards digitization. It's just the same thing that happened to us in 2008, where all of a sudden everyone wanted to run video ads. Here, all of a sudden everyone wants to do everything remotely, even health, right? So now everyone is running around saying, let's do everything remotely. So that, you could argue, is just an acceleration of something that was probably going to happen over a longer period of time anyway.
Yep.
Right. In the United States, at least, what they call the brick and mortar stores were sort of on an inexorable decline anyway. It was hard to get investment funding if you tried to do anything in retail, and so this has just accelerated that demise, it looks like. So I think there can be a cogent argument to be made that all this shock to the system has done is accelerated everything.
Yep.
Right. Whereas previously, I think you couldn't make that argument completely, I think, because it also killed a lot of things that just because funds ran out.
Yep. No, that's a super, super interesting take, because, I didn't realize, that 2008 from a venture dollar point of view was really difficult. I remember Sequoia's rest in peace, good times memo, but they came out with a similar one in March of this year, if you remember, right?
Yeah.
They said COVID is real, right? And everyone was started to scramble, right, in Q2, right? So I think it's an interesting observation that funnily, or maybe so far, early stage VC dollars have not dried up, right? So which is a good sign for our audience and entrepreneurs, right? It's a very encouraging sign. One question from the audience, given a lot of the folks are dialing in from, sort of the Indian ecosystem, the question is about your perspective on the Indian B2B ecosystem. And I think you mentioned a few, but, sort of in general, quality of entrepreneurs, opportunity ahead, both for Arka kind of companies which are focusing globally as well as B2B opportunity within India and Southeast Asia? Any thoughts on that?
I mean, from what I can tell, and I've been only looking at this for the last 5 or 6 years. As far as the Indian ecosystem, it is relative to the rest of the world, United States and Western Europe. It is a little difficult for an Indian B2B company to survive with just the Indian market.
Yep.
So it's quite, and that's why this cross-border and global and all these things come in. You can take advantage of the fact that the Indian enterprise systems, especially in tech, are very similar to the Western ones to get the product working, get the product market fit, and then try and find a large market like the United States or European markets to sort of adapt it and then go sell it there. So one point I'll make is I think there needs to be an eye towards international expansion, and when you're starting a company that's doing B2B software or B2B in India from the beginning, and that has its subtleties associated with it. But I think the capital efficiency as well as the talent availability and the fact that if you build a fintech software product in India, it'll probably work in the US, barring a few customizations, is a pretty strong advantage. So I've always been generally a big fan of that. Now, raising the capital to hire a sales guy or come to the US is a different question, which is a question you guys will get involved in.
Correct.
And that tends to be an angst-ridden conversation. So I don't know if I answered your question, but I think the person who asked the question, but I think people should look at international expansion sooner rather than later if they're running a B2B business in India.
Mm-hmm. Mm-hmm. Yeah. No, I think we agree wholeheartedly with you, and that's why Arka Venture Labs exists. Okay, there's a question that came in. What's your opinion on Sas B2b? So I guess the question is more specific around SaaS versus something else. And this is from Sriram Subramaniam. Yeah. Any thoughts?
Yeah, I'm a huge believer in cloud services, SaaS services, sort of off-prem hosting. Amazon, the AWS is Microsoft, Azure, and Google Cloud. The growth rates are phenomenal. The bandwidth being used, the CPU compute power being used. If you look at all the metrics at the big three multi-cloud areas, as well as startups and other industry services servicing them, the usage is tremendous, which in aggregate leads me to believe that the SaaS business is in general on a huge growth curve. And if you look at the valuations for people like Snowflake and others, you have no choice but to come to that conclusion. So I'm a big believer in the cloud business in general.
Yep. Awesome. I think that'll be it. We are just on time. Sriram also says thank you. So thank you again from the whole team here at Arka Venture Labs, Jayant. Really appreciated your time, and we will, put up the video. We'll, for the audience, for the larger audience as well, because we're recording it. So again, thank you guys. Thank you everyone for dialing in, and look forward to another Arka Talks in the future. So thank you and signing off.
Thank you. Thank you. Take care.
Yeah. Bye.